All right, so good morning, everyone. Uh, we're getting less and less people. Uh, Sentiment is very negative. Um, yeah, I'm seeing that, and I don't know what to do with that, but that's something to note for sure. So good morning. Only safety. I would argue that you can look in the liquid leaders, and it's not that bad. Yeah, everyone's just crying. Look at the leaders. Let's look at the leaders. Okay, you have the memory stocks at the top, but then uh, if you look closely, we're pulling back into rising structure, APLD as well, iron. So data centers are just having a light pullback. LRCX, semiconductors are doing well. PL just pulling back. TER as well. SATS is broke down yesterday, but look at that chart. Uh, that's not a chart that I would have wanted to trade personally. Clack new high, light gapping up, finding support at the 21 DMA structure. AMAT trading at the highs. ASML semiconductor strong. TTMI just drifting higher. Wayfair holding the 21 DMA structure. Oh, let me share. Thank you. CN backtest of the 21 day structure. Google backtest of the 21 day structure. VRT still well above 21 day structure. Caterpillar nice reaction to earnings. CHRW as well. ADI semis new high. Core gapping up as well with the optical group. MTSI semiconductors really nicely. Rocket Lab just building higher low in the 21 DME structure. I I can go on and on. But yeah, it's hard. Yes, it's choppy. But at the end of the day, it's not that bad. Uh, so yes, it can become bad, obviously. Uh, Obviously, it's not an easy market. It's very, very choppy. It's not forgiving. Um, but I just want to kind of play devil's advocate here and just show that liquid leaders are showing very normal pulling back action. And that's what I trade. So I don't care about everything else. All right. So let's look at the market. All right. So Wednesday, we were a bit short term extended. We had FOMC. Yesterday, that was a pretty aggressive shakeout and slash backtest of the rising 21 DME structure. But the uptrend structure is still intact. So, uh, yeah, you can anticipate a 6 month correction if you'd like to. Uh, but I'm just relying on facts. That's my job, and that's how I make money, all right? My job is not to predict. Uh, I don't want to be here and predict that this will happen because sometimes you will be here and you just continue higher, all right? You never know what will happen, and that's why the 21 day structure is my guardrail and the way for me to assess if the trend is still active or not. All right, and right now the trend is still there. It can change today. All right. I'm not saying that the market will make a new high and just continue a big beautiful trend for the next few weeks and months. I don't know. I don't know that. But everything that I know is we made that low in November. We reclaimed the 21-day mid structure. And yes, it's been very choppy since then. But we are still making higher low, even yesterday. So until it changes, we're only in a pullback structure within that uptrend. All right. Yes, it's not an easy uptrend. Yes, it's a very choppy uptrend. But at the end of the day, this is still an uptrend. So we backtested the base structure yesterday. We closed mid-range, so that was not that bad. We had a good close. Uh, this morning we're gapping down. All right. So we'll have to see how this is handled. We have new fair Fed chair. Uh, but to be honest, I don't care about the news. All I care is how the market will react today, and that will tell the story. So yeah, backtest of structure, the recent range structure, as well as the base multi-month base structure. So after a breakout, that's usually what you get. So again, we're still within normal price action. I think it's important to just acknowledge that fact, uh, that price wise on QQQE, we're still just backtesting base structure in the 21-day mid structure rising. So today, what I'm looking for, I want to see things stabilize. All right, close the week ideally strong, close above that range and that base structure. But if we are weak today and we close below the 21-day mid structure, then I will do like every other time that we did so, and I will reduce my new exposure, keep my cores, and just be patient for when the market set up again. All right, that's the only thing that I can do. Follow my rules, follow the system, and follow price action. All right, price action is first. Brett. Brett didn't confirm the reclaim of the 10 DMA, so the final confirmation that we were looking for. But it's not that bad either. We're contracting, we're just slightly below zero on the MCO, meaning that McClellan summation is flat. We don't have a full risk of hook down from the 10 DMA retest. So I want to see that today. It will tell a lot. So we're right into the 21 DMA structure in QQQE. MCSI is neutral. So can we bounce from the 21 DMA structure? Brett come in and turn that McClellan up. That would resume the uptrend attempt that we had. Or we fail. We reject the 10 DMA on the McClellan summation, meaning that Brett is weak, Brett is breaking down, Brett is accelerating to the downside and contracting further, which means that we need to protect our downside, we need to manage risk, and to reduce exposure. All right, but I think it's too soon, especially with price right into rising structure, and with Brett being flat, not full of not full risk of hook down type of action. It's simply neutral here. All right. So this morning I don't want to be full positive. We make a new high. I don't want to be full negative. We need to have a correction. I've read a lot of that yesterday on X. We need to have a correction. We need to have a correction for 10-15% down in order to remove that chop. That's not true. The market will decide what it needs to do in order to be out of that chop. All right? Maybe we just broke out, retest, and now the real trend will begin. Maybe we had a breakout, we failed, that breakout, it will become a failed breakout and we'll go into a pullback, a correction. But if you fix yourself in a scenario that the market needs to do that in order to do this, then you're locking yourself in something that will be very hard to trade after that. You will be stuck in that scenario. It will be hard to change your mind. So it's much easier to just follow price, follow your system, follow your rules, follow your position. Our stop loss are there to say to ourselves that we will sorry, it's not easy this morning. We are wrong, and we need to reduce exposure. The stops will tell that story. The structure will tell that story. Brett will tell that story. All right, no need to anticipate. We'll just react. And I know it's hard. We want to make sense of everything. We want to explain things. We want to know what will happen in advance. But that's unfortunately not how the market works. And yeah, I'm seeing way too many experienced traders on X falling in that trap. All right, so that's about the market. Let's watch the portfolio. All right. So like we discussed, gap down. So we had good selling overnight. We had good bounce on the new Fed chairman announcement. We had another selling on PPI this morning at 8:30. So go figure. I don't know what will move this market. Sorry, 2 seconds. All right, sorry. And yeah, I don't think that the market itself know what it wants to move. So uh, I think that less is more. Like I said yesterday, I think that it's worth staying engaged. Um, but if you don't feel comfortable, there's no shame. There's no problem to just uh, stay on the sidelines, wait for market clarity. All right, I handle that indecision uh, very well. All right, I'm built like that. So as long as the market is in an uptrend structure that the liquid leaders are setting up, pull back into their rising 21 day structure, which is the case, I want to be exposed. All right, that's me. That's how I trade. I've always traded like that. So yeah, I will just continue to do that. All right. Um, you can call me crazy. You can call me over trading in choppy markets. I don't care. My signals are there. I just follow them. All right. McLean summation in a downtrend, though, just telling me to chill on the new exposure, and that's why I chilled yesterday. I was not adding aggressively. I was not going into margin. I'm off margin, and for me, that's being not aggressive. All right. So I have my position, I have my exposure. I want to see how it goes today. If it fell, it fell. I took mine air. I accepted it. I will stand by it. And if I'm stopped, then that's the price I paid to test that market cycle. All right. I've saw too many times that a market that goes into a pullback right into structure, everyone is negative everywhere, and finally it goes, and then you wait for too long, you wait for the perfect conditions, and it's now too late to engage. All right, that's how I trade. So don't tell me I'm wrong, uh, because I know that I can be wrong, but I accept that risk, and sometimes I will be right and it will work, and I will make those big returns mounts, and sometimes it just fails, and I'm fine with it. All right, it's not a mistake. I'm hearing that way too often. All right. So maybe a quick question. Do you have a limit for your daily incremental NAIR? No, I don't have. I manage my NAIR. Uh, I try to keep delta under control, so I won't go ahead and open like 3% NAIR on day one. All right, especially if we come from a pullback, from a correction, then I test slowly. Day one, maybe 1%. Then if I get traction, I had another one, and scale in on the bit of weakness that we have early on in a new option. But now this is kind of a different story because we're already in a confirmed uptrend. We didn't have a big pullback. We didn't have a big correction. So for me, it's simply to keep my nair steady, and see the market if it wants to resume higher. All right, that's a bit different. So SNDK gapping up. Yeah, 1.2 nair is typical for me. Uh, so that's that's not being super aggressive. 1.2% to risk on yesterday's type of pullback into rising structure. I think it's very logical. So SNDK gapping up 22-ish% on earnings. WDC as well. Not that much, but it was down pre-market. Now it's up. So we had STX gapping up on earnings earlier this week. Now we have SNDK, WDC. So it's really helping my equity curve, and helping me as well being more patient with the rest of the exposure that I have. So early on, what I said, if you don't have those kind of position helping your portfolio, helping your equity, then you might not have the same patience that I have with my NAIR and with new positions. So that's why everyone is different. Every situation is different as well. If you don't have those two in your portfolio, and you have the chop that we have right now, then don't be fully exposed. Don't have as much NAIR. Uh, I'm having that NAIR, that new exposure, because I have traction in those names. Uh, so for me, it's helping me being maybe a bit more aggressive that I would do in this kind of opportunity, just because they are pushing my equity. All right. Iron, like I said, pull back into recent structure, still above a rising 21-day structure. Um, we'll see how it goes with crypto kind of selling off. But crypto miners, and I don't know if we should call them data centers nowadays, but anyhow, uh, they are showing a good divergence with crypto, and that's good to see. Backtest of range structure on Hiron, backtest of rising 21-day structure on Wolf yesterday. So let's see how it goes today. VRT very strong, holding kind of the base structure as well. So that was a good level and structure to hold. Core gapping up this morning, but yesterday look what we had as well. So there's a theme, there's a structure pattern. We retested the recent days range structure, retest, and now making a new high on this gap up. Rocket Lab, I added to this today, trying to form a higher low at the 21 DME structure. Uh, Kratos, probably at risk today if we give that 21 DME structure away. But like I explained yesterday, I'm not in a hurry with that position. All right, I still think that we're trying to make the right side, trying to tighten up on the right side. But if we close below the 21 DME structure, then I'm out. EOS, trying to hold the 21 DME structure on the back test. It's volatile, but hey, that's a 9% ATR name, so that's to be expected. All right, know what you trade. That's very important. So again, same thing as Kratos. If we give that 21 day instruction, we close below, I'm out. GBL, good action yesterday. We retested the 21 EMA, the recent swing low. We're trying to gap up as well this morning. But this is a good right side, good back tests, range action in the 21 day structure. So let's see how it goes today. NBIS, probably my weakest position. I decided to hold because we close inside the 21 day structure. We close above the recent swing lows as well. So today is probably make or break for NBIS. If we close below those lows, then I'm out. And QQQ then is just to track market action. Whoops, sorry, wrong one. So Focuslist. So if you decide to not trade today, that's good. That's your plan. Perfect. But I want to provide some opportunity because, like I explained, I think the market is not done yet. So as long as it's not done, we need to get ready. Be always ready and have a focus list in our pocket. All right. So APLD, the leader of the data centers. So you have APLD, HUT, Hiren, Cypher, and obviously Wolf. So just wanted to provide kind of other opportunity in the group that is still setting up. So APLD, HUT, gapping down into rising 21 day structure for a potential higher low. So those two are looking very good. I would look for APLD and look what we backtest as well. This is the team that I was talking about a bit earlier. We're backtesting the base structure. That high from October, that high from January, breakout attempt, backtest. All right, if we fail, that's a failed breakout. But when a breakout happen, always expect the retest of that structure. And then if you hold that backtest, this is constructive. And if you fail, but that's a game. We'll call that a failed breakout and you're out. Rocket Lab, as I explained, potential higher low in the 21 day structure. Kratos, same thing. EOS, same thing. We discussed that one, and GBL as well. So that's all the names that I would be looking today. Obviously, there can be others, especially on a weak open. Then you can have some other leaders that were above 1 ATR from the 21 DME structure that suddenly pull back into buy area, and that those will become available in the scan. All right. So good question from Lionel. I would like to ask. I sold half of my position of WDC just to secure some cash on the earning. Would it make sense to rebuy or just to extend it? So for me, I only buy when there's a setup. All right. I don't want to. I mean, if you play EPs and like the 10-minute opening range breakout or something like that, then yeah, you can use that strategy to kind of reopen the risk that you took off. Uh, but for me, when I take that risk off, I don't want to raise my cost basis, raise my risk again, and you don't know how it will react on open session as well on that gap up. Maybe it gap up and fade. Uh, so I usually don't like to re-had that risk. Uh, SNDK didn't offer that opportunity, but I prefer to wait for the back test and the pullback into rising 21-day mid structure to re-had a full position as another position, right? That you manage with its own stop loss, with its own too hard target, and limit order to de-risk the trade. So for me, that's also a mental part of my system where if I start to rehab much higher, then you put your position at risk because now your cost basis is much higher. So I prefer to just be patient, let it work above the 21-day mid structure, do nothing unless it pulled back into the 21-day mid structure. Uh, Broadsword, I'm not long Cypher anymore. I'm long Hiron and Wolf. Oh, thank you, patient golfer. Yeah, I think I closed Cypher. Um, Probably just before it it bounced back up. Uh, yeah, I don't know exactly. I think I closed it on this day. Oh yeah, I was using hard stop loss at the time, and I think I've been ticked out uh, on this low. I don't remember exactly, but you can go back into my journal, and you'll see. I don't remove messages. I don't delete trading call like some might do. So I opened that on January 26th, and I closed it. Wait, did I not call the? Oh no, okay. I said stopped. So yeah, that was a hard stop loss. It got closed. Uh, on the same day. So I took pre-market on 26. Yeah, okay. I opened there and stopped early in the session. That was my attempt to go hard stop loss. And then I was 0 and 3 with being ticked out at the lows and realized that was not the good thing to do. No stress. Don't stress yourself with that, buddy. You will have enough to stress today. All right, so use are yeah, I don't like to play those sharp pull back into rising structure. I usually like to see them uh, settle out. And this name like to pop and drop. We discussed that. I think it was earlier in the week. Uh, it likes to pop and drop. So pop and drop, and it's like you're playing this here, you're playing this here. Uh, I like to see the right side and not playing that just after a pop. All right, uh, but it's just because of the nature of the stock. Yeah, obviously it can change, but it's not because you put a trade on that it will change character. Yeah, that's a good point, Poodle. That's why I was kind of saying, do we call them crypto miners or data centers nowadays? These names really diverge and decoupled with crypto and Bitcoin action in the last few days and weeks. And that's why I played them. If they were purely crypto miners, I wouldn't have touched those. Uh, but I had Hiron, had good feedback. I saw that it was decoupling from crypto, and that's why I was pulled in Wolf. And yeah, APLD Hot are two of the top leaders of that group. So probably a good idea to look there as well. Yeah, that's a name that you have to play in the 21 day structure, Dawkin. All right. It pops, drop, grind. Pops, drop, grind. Pops, drop, grind. Pops, drop, grind. Pops, drop, grind up. What will it do? No idea. But if it history repeats, then chances are that if you grab that at the low of the structure, you can grind a bit, be patient with that position, and then it pops out of nowhere. Uh, that's how it moves. So if you want to play that, uh, just know what to expect. All right. All right. So game plan. Um, that's a tough one. That's a really tough one. Um, like I said, let's just go fact and data as well. All right, with what I track in my system. If we look at QQQE, QQQE is still making higher lows, holding the rising 21 day structure. So price wise, we're still in an uptrend. Brett, despite the fact that it's still below the 10 DMA, it's only flat. All right. So I think that we need more information, and today is kind of pivotal and key spot. Today we can either hook down and breadth contraction accelerates and resume that trend, or we find support into structure, breadth come in, we confirm the hook back up, we follow through on that uptrend attempt, and we resume that uptrend that started from November, and the chop and the shitty action that we had since December was simply a pullback basing in that larger uptrend. All right, that's also a possibility. The other thing is credit spreads that I rely a lot on rejected the declining 21 day structure like it did January 20, like it did in December. And yeah, you can anticipate that we will spike, but that's not what we have right now. Right now, we are rejecting a declining 21 DMA structure, and we're not above. We're not trading above structure. So this is still a risk on market based on risk appetite of institutions. All right, I think that's important. It can it can move higher today and spike above the 21 day structure. That will probably happen with price breaking down structure and breadth hooking down and reaccelerating to the downside. So everything will be put into place to form a better scenario and a better game plan based on that information. So far this morning, I think we're too pivotal and right into structure and right into support to anticipate the bigger pullback and anticipate the big correction. All right, I think it's too soon. If we break structure in QQQE, if we reject the 10 DMA and hook back down on McClellan summation, and yesterday was not a hook down, we're flat. And credit spread spike above the declining 21-day structure that becomes rising 21-day structure after that spike. And my new position stopped me out. Then, okay, it will be time to reduce exposure, be more defensive, wait for the next market opportunity. All right, but we're not there yet. And until that we are, I am still in observation, not ramping up exposure on margin. I don't want to do that, especially on a Friday. But I think that's also too soon. As long as my positions are holding and as long as we don't see those red flags that I just explained, we remain in a market into support, still choppy. Yes, I'm giving it that fact, but it's not dead yet. All right. So that's a game plan for me. Exposure wise, I don't plan any more moves today. I want to see what happens. All right, I want to see what happens. I want to see all we discussed, how it plays out. If the buyers are stepping in or the sellers are stepping in, I want to see what happens today. Yes, I will go through iron earnings next week, just as I did with SNDK and WDC. It all depends if it's extended into earnings. If it extended, I will trim a bit more like I did with SNDK and WDC. And if it's not extended, then I might carry the position that I have. And iron is still a very small position for my portfolio, so not a big stress there. I'm not sure to understand your question. How do you consider earnings gap? Can you reformulate or explain a different way, please? Yes. In case of gap down, what do I do? That is it what you want to know? What will I do in case of gap down? I'm not sure to understand again. Okay, so if it's gapping down, it's gapping down. If the gap down close below the 21-day structure, then I'm out. Just like every other positions. And think about earnings as uh, almost a roulette, right? If you're in the liquid leaders, you should come on top if you carry into earnings, right? So you have those SNDK, those WDC. Sometimes you will hit maybe higher end gaps down. You take that loss and it goes into the statistics and into the mathematics of your hedge. All right, that's like every other positions. Uh, Gap up, gap down happens. You don't control that. Everything that you can control is you take your loss if it closed below your stop loss. And for me, the stop loss remains the 21 DM structure because that position was already de-risked. So yeah, you just have to accept the fact that it might gap down and you might take a loss on that earnings play. And like I said, sometimes it gaps up like SNDK, and over time you win, you lose, and on balance you win because you're in liquid leader stuff. Oh yeah, you need to have the cushion though. You need that cushion. Uh, so read the Git book part about earnings management. So go look about the implied move based on options. So let's say that iron is 10% implied move. All right. If you have a 2% cushion, then I wouldn't hold into earnings. But if you have already de-risked that position, if your cushion is higher than the implied move, then you can have and earn the right to hold into earnings. That part is important. I have a section on that in the Git book. You can go there and look into it. All right, guys. So that's a game plan. That will be an interesting day. That's for sure. Um, what I would say, so keep risk management in mind. All right, that's first. That's priority number one. All right. If you put on risk, accept that risk. Uh, if you don't have exposure and you want to play that weakness, uh, be careful. All right, just be careful because the market is very volatile. I think that smaller position with which room to work, room to breathe is important in this market. Uh, have very tight stop loss. Yes, it can be enticing because you limit your downside, but you will be chopped a lot. All right, so you have to find that point where, uh, and especially in still an uptrend but choppy and volatile one, then at least for me, I am more comfortable having smaller position size but larger room to breathe and work. All right, that's the way I play this market anyway. But if you decide to do so, take one or two position, see if it works, and yeah, take it slow, position by position. All right. Will you come up tonight? Come up where? What do you mean? Is there a party tonight? I'm not invited? Come on, Lionel. If there's a party, you have to invite me. Yeah, small position means, yeah, you can take the same easy risk. All right, but the problem is if you risk 0.25 or 0.5% easy on a trade and you have a 1% stop loss, then yeah, it feels comforting because you take, or let's say 0.25. Let's say that you risk a bit less with tight stop loss. All right, but you will get stopped a lot because the market is volatile. So you will try 4, 5, 6 times to get into a position. At the end of the day, you will take a 1.5% loss just to get in, while you can take 0.5% in a position with larger stop loss, smaller position, be more patient, and if it stop you out, then you have real feedback. You don't try 4, 5, 6 times to get in. Yeah, Irish. Thanks for SNDK. Thanks for me as well. If I didn't have SNDK and WDC, uh, EC would look a lot different. So I appreciate having SNDK as well. And that's part being patient with your position. All right. If I would have closed all my position when the market was shaky, uh, because SNDK, I have it for a long time. All right. So I opened that. I think it was in that tight area at the end of the year. At the end of the year, it was right here. So we had kind of two big shakeout below structure. And if at that time I would have closed everything, all right, uh, I wouldn't have SNDK WDC anymore. So that's why in my system it's very important that if I have a clear risk off signal, I close my new exposure, but I try the most that I can to hold on to my cores if they hold well. All right. Yes, I do chart my equity curve. That's what I share each end of the month. All right, guys. So we'll call the end of this session. Have a good one. Take care. Uh, be cautiously optimistic. And if the market craps and just cracks, then so be it. We'll take our loss and we'll wait for the next market opportunity. All right. Take care, guys, and have a good weekend as well. All right. Cheers. Bye bye.